The real reason why Warren Buffett has not bought any stocks in 2022. Welcome back to Wealth-ology. For today's video, we will be going to talk about the real reason why Warren Buffett has not bought any stocks in 2022. Let's get started. When it comes to the stock market or the economy, there are several factors to consider. Warren Buffett is one of the go-to individuals that all of us investors look to. He owns Berkshire Hathaway, the world's largest investment corporation, and he has consistently outperformed the stock market. He just finished his annual shareholder meeting. Warren Buffett held a shareholder meeting where he gave his thoughts on the stock market, the economy, and the stocks that he was buying and selling. But the unusual aspect of this shareholder meeting was that he relived. He has not purchased any stocks in 2020. Berkshire Hathaway, his investment firm, has really been selling stocks. Buffett's airline companies were evidently one of the large groups of stocks he sold. Delta, American Southwest, and United Airlines were all completely sold, which came as no surprise to most investors, but which I'd want to discuss in this video. We'll go over the equities he's selling at Berkshire Hathaway, but we'll focus on the fundamental causes. Why hasn't Warren Buffett bought any stocks as a net vendor? Apart from his airline stakes, Warren Buffett's larger stock sale, and we're amazed no one has brought this up, he sold the majority of his stock in Goldman Sachs. He also owned 12 million shares in the company previously. He also sold almost 10 million shares, accounting for 84% of his total holdings. Even good banks can be under a lot of stress if economic issues become serious enough. Buffett remarked, and I will be very grateful we've got the Federal Reserve System standing behind him and quiet. We're not sure what to make of this, but let's just say, at this time, I would not want to be a Goldman Sachs shareholder. However, Goldman Sachs was not the only bank that Buffett sold. JP Morgan Chase, which owns 3% of the Berkshire Hathaway, was also laid off. Now, this isn't quite as high as Goldman Sachs, 84%, but it's something to consider. SiriusXM, the broadcasting company, was another stock on the market for sale. Berkshire Hathaway sold over 4 million shares. One large names on the selling list for Berkshire included Amazon, the e-commerce giant, General Motors, the automobile company, and Phillips 66, the energy production. Berkshire Hathaway also sold other businesses, but we don't have time to go over them now. However, the major question on everyone's lips is why. Buffett has sold a lot of stocks and bought nothing. The first thing to understand is that Warren Buffett does not lock funds and so is unable to purchase equities. He actually has $137 billion in cash stashed away, ready to be unleashed. Buffett himself stated he wants to use a lot of it, and he stated, quote, "We are willing to do something extremely huge. On Monday morning, you are welcome to visit me with a transaction worth 30, 40, or $50 billion, and we'd do it even though we rarely like what we're seeing." However, we have yet to come across anything appealing, and that's the first and most important reason why he isn't buying any stocks. He can't see anything appealing to buy at current stock levels. Here's what Warren Buffett had to say about stock prices last year. He stated, "We planned to move much of our excess liquidity, additional capital, into enterprises in the years ahead. Berkshire Hathaway will own the immediate chances for that there. However, pricing for enterprises with promising long-term prospects are exorbitant. You know, Buffett and many other value investors, including myself, can't seem to find any businesses worth buying. The same both and a seating. But for those who have read all of Buffett's shareholder letters over the years, it's been fascinating. The similarities between what Buffett said today and what he said yesterday may have caught your attention. And this was in 1987. Buffett stated in a letter to shareholders in 1987, "Sure, the stock market has been epic in recent years, but we haven't found much to do with it. No stocks currently satisfy our criteria, other than what we consider permanent or arbitrage holdings. We had no large common stock investments in 1987. In 1987, he said something pretty similar to what he says now. And some of my elder viewers may recall the stock market crash of 1987. Let's just say it was not fun for investors, but it basically went down sharp and took about 3 to 4 years to recover. The other, and to be honest, a fairly frightening reason is that Buffett appears to be highly skeptical about where the market is headed in the medium term. Buffett, on the other hand, was far more circumspect with his statement and his investment advice, particularly when it comes to the short term. He was adamant about not talking about the stock market in the next years. Instead, he advised that investing is fine as long as it is done for the long term. He said, "Invest as if you were a farmer. Buy it and retain it for 20 to 30 years without considering the price." Do we agree? Or, on the other hand, with this method of investing, it certainly makes me think about what might potentially happen in the stock market over the short term, medium term, over the next 3 years. Buffett has never sounded so concerned in the way he speaks. The third reason for Buffett's non-purchase is the following, is the uncertainty around consumers' spending and company revenues. And it's something that many of you may not be aware of. If you are unfamiliar with stock valuation, as you can see, US value investors seek to purchase a stock at a discount to its true worth. We need to know the cash flow and profits in order to calculate the intrinsic value. However, it is incredibly difficult to predict how much money companies will generate in 2020. How much money will people spend this year and in the years ahead? Uncertainty is a company's worst fear, and it's having a negative influence on us investors. You've heard of millionaire Mark Cuban. He stated the same thing about Maverick's owner. It's nearly impossible to foresee where consumer and corporate demand will come from, in my opinion. As a result, it's difficult to produce a business evaluation. He then went on to tell CNBC that he was startled. So far, how many stocks recovered? I believe he said, "People are understandably bullish about the markets right now." We simply do not believe they are rarely considered. What we can expect on the other side. The Fed is the final reason I'd want to discuss. They've been making some extremely fascinating movements since then. We observed this catastrophe, and the Federal Reserve said in March that it would inject more than $4 trillion into the economy, into the economic system. Interest rates have been lowered. They have loosened financial regulations, and they've raised their landing significantly. As you can see, our meeting is clearly a horrible idea. However, one of the benefits of a recession is the emergence of terrible enterprises, the ones who don't manage their finances well and have poor business models. They go up of business. You can think of it as a nice rain washing away the weeds. Except these bad companies, they don't go out of business when you throw money at them. The Fed has pledged up to $750 billion in working with big companies on loan and bond offering, that have also pledged a further up to $600 billion for lending to small and medium-sized businesses. And the Fed needs to step in to a certain extent to provide certainty in the markets. But over $4 trillion in the financial system, that's a lot of money. At the end of the day, we're just in one of the weirdest times when it comes to the stock market, when it comes to investing. So So many unexpected underlying reasons are causing so much confusion. But in the end, we always succeed. We must concentrate on what we can accomplish as investors. Our portfolio must be indestructible. Make sure we're investing in companies with solid business plans and financials. Make sure we have appropriate hedges in our portfolio, such as gold and, of course, sufficient cash. Like Warren Buffett has 4 safety precautions. We have no influence over market situations outside of our control, but we do have control over our investing selections. So what did you learn from Warren Buffett's ideas, experience, and strategies? Please let me know in the comment section below. And if you like this video, please give it a thumbs up. Turn on the notification bell and subscribe to our channel for more. Thank you for taking the time to watch. Stay tuned for our next video.